Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. This market right now seems to be the story of two bearish pitchforks and two moving average. The first bearish pitchfork is the dark blue breached twice and repaired twice, early February to early March bearish shift pitchfork. We are right now just above the dark blue middle time, currently at 337.60, as well as just above the 50% Fibonacci line in November 24 to February 25 move at 335.15. The second pitchfork is the more recent and larger bright red early February to late April bearish Andrews pitchfork. On this one, the market is in between the middle time below, currently at 321.90, and the upper time above, currently at 377.60, though 2 weeks ago the middle time was being tested. And then there are the two moving averages, the first being the green short medium moving average, currently at 367.20, which runs just above the dark blue upper time, which 2 weeks ago and then last week helped, along with the upper time, to cap the market with a horn top pattern. The second moving average is below the market, has not seen the market touch it since, well, November 23, so quite a while ago. It is the rising gold long moving average, currently at 329.20. These are the market's current senior participants. Elsewhere we have below a support zone between roughly 325 even to 320 even, and this is a crucial level, as if this is tested then we could be looking at a pretty large bearish pattern here. We might have a possible whole of 2025 a very large double top pattern. Now this hasn't happened as yet, but it is worth considering and especially remembering. Thus, whilst they are not targets yet, we might have primary potentials down in the 263 even zone and a secondary harder to reach potential down in the 229 zone. Finally, there is something else I'd like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 17 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulder bottom for bright red neckline on my chart, which is currently at 274.90. The break higher over this neckline has already reached its primary target, but it has, or should I say had, a secondary harder to reach, much harder to reach target X up in the 433.35 area. What is interesting about this secondary target is that nearby is the next 100% projected Fibonacci line here at 433.75, quite close in the scheme of things. So what does this mean? Does this mean the market will turn on at these levels? Well, up to now I was not able to say, though we did have a monthly shooting star pattern, usually seen as a bearish pattern in February, an indecisive doji cross with a long tongue topside on it in March, but then April was a bullish engulfing pattern, something which is not that surprising given the previous month was an indecisive doji cross, though May made a significant pattern, a bearish open and close along Black Mariposa, that dropped down through and closed below the important 50% projected Fibonacci line at 347.20. Thus prices for the first time in May closed back down below the dark blue upper time, currently at 380.20, and that's of the interesting 2019 to 2023 bullish Andrews pitchfork marked in dark blue on my daily chart. So far in June, whilst we have sailed up over the 50% projected Fibonacci line, we have not stabilized over it. And we are right now back down below it, though not excessively so. 2 weeks ago I said I was siding towards the topping out camp, and as I have said here for months now that, and I quote, if there ever was an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice, end of quote. Below we now have the rising 1 year moving average, currently at 318.40, the 2011 high at 309 even, and the dark blue middle time currently at 304.5. These will be reasonable supports, I would think, so just be careful of any reversion back up towards that old target X area overhead, though as I've indicated earlier, it would seem prices may be trying back down towards the bright red neckline below. London coffee. 24 weeks ago I drew a new large pattern that for a considerable time encompassed all the recent significant elements within it. It was not ideal, and it was also quite large. It was a bright red, shallow, large bull channel. That's currently 49.56 to 62.07. Now 4 weeks ago the lower uptrend was breached and then broken on the downside, pushing down through the 50% Fibonacci line of the May 24 to February 25 move at 45.55, as well as the June 24 high at 43.95. I said back 10 weeks ago, and I quote, "Apart from the bright red lower bull channel line, we really don't have that much until we reach the 50% Fibonacci line of the May 24 to February 25 move at 45.52, which ties in with the early December lows at 45.40 and 45.07, but doesn't look that strong. However, we will have a wide congestion zone further down, starting at the April 24 high at 43.38 down to the lesser Fibonacci line at 40.95, end of quote." Now I added 2 weeks ago, and I quote, "This wide congestion band between 43.38 to 40.95 is now about to be tested," end of quote. To add to the bearish pressure, I also said 7 weeks ago, and I quote, I'm sorry about the amount of quotes, but they are there. They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above, end of quote. Well, we now not only have the overhang pressing lower, but also the impactful force of the break below the bright red shallow large bull channel. Thus, for such a break lower, we have a primary target down in the 41.64 zone, reached this past Friday, and a secondary, harder to reach target X1 down in the 35.15 zone, with a tertiary, much harder to reach target X2 down below my chart in the 28.60 zone. So what do we have in the way? Well, apart from the bright green lower time, currently at 38.48, there is some congestion at 40.95 and the August 2024 low at 39.32. Beyond these, well, we have a pair of interesting 50% Fibonacci lines for November 21 and February 25 move at 38.08 and the 50% Fibonacci line of the May 20, well, the May to February 2025 move at 36.49. To be honest, as I said 2 weeks ago, and I quote, "If we were to manage to break the August 2024 low and the congestion that is just above it, then I'm not sure how strong these 50% Fibonacci lines are below." And it's the May 2021 move. Just found it. Yeah, if it does break lower, I'm not too sure how strong the support's going to be.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.